Yeah, should be
Hello,
present.
Oracles, and welcome to our special live stream here on Sunday afternoon on the East Coast. We've got Alexandra, Tesla Boomer Mama, who's been stirring up the pot out there with the credit ratings with Moody's and S&P, and we've got Vinny from Investment Club. How are you guys today?
Doing
Just
great.
fine.
How are
Thanks for
you?
having us.
Excellent. Thank you guys for being here. I appreciate this. This is awesome. So we're going to jump right in. Actually, you know what? Before we get really started, most people on here know Vinny. So Alexandra, give us a little background on yourself. Where did you start? What's your background? Where'd you get all your knowledge from?
Where did I get all my knowledge from? God given. Um, I'm 56. I started in the financial markets when I was 21. First on the trading floor of Deutsche Bank, then a fund manager for Deutsche Bank, then a fund manager for Commerzbank. And though there I was quite famous, already had big funds to manage, actually the biggest European funds, and they were rated by Moody's. So Moody's came and rated our funds, and then they hired me to become their person in charge of all fund ratings in Europe. I did that for 6 years, from 1997 to 2003. And then I opened my own rating agencies, which I did for 3 years, sold my parts, and left the financial markets in 2007. Founded a real estate agency in the south of France, loved doing that. And then in 2014, moved to California. And since then, I'm running immigration consulting business where I help entrepreneurs immigrate to the United States. I help them set up their businesses and all that. Love doing that as well, getting green cards. And then how did I get into this community? Well, in 2020, we bought our first Tesla. We actually wanted to buy in 2017 a Model 3, but the wait lines were too long and we needed a car. So we got a Bolt then. That was our second EV after BMW i3. And then in 2020, that lease went up. We switched to a Model 3, did a test drive before, and that was it. That was it. That test drive is and I think that's especially important because we had two EVs before, so we had the torque. I mean, obviously not the torque, but we knew what EVs were about. But even after those 6 years of having EVs, putting our butts into a Model 3 changed the world, and that was in March 2020. That coincided, I don't know what the good Lord wanted with us, but that coincided with being the moment when the stock exchange crashed for COVID. And I said to my husband, we have to go all in Tesla, and that's what we did. So it's been now 2.5 years, and it's been a ride, no doubt about it.
Yeah. No. Wow. You timed that very well. Yeah. Sometimes things,
Yeah.
and just
Yeah.
talking about your past and what you've done and all the good work that you're helping for entrepreneurs. I mean, I think that's just that is karma's way of paying you back for all the good work you have done.
Thank you. Thank you. Yeah, I love my job, and we're getting a lot of green cards for these families, and I'm very happy to bring these really talented people to the United States. Thank you.
That is awesome. Now with that, are you, because I know that's one of the things that Tesla talks about too, with talent and bringing talent over, and that's a challenge, is trying to get people into the country that can absolutely help Tesla and SpaceX out. Have you helped any of them?
No, because what they do is employment-based green cards or employment-based non-immigrant visas. So that is, I would say, relatively simpler than what we're doing. What I'm doing and my firm is doing, my employees, I always compare it this way. Doing a green card by family reunion, while it's not easy, it's a puzzle of 4 pieces. Doing a green card because you have an employer sponsor is a puzzle of 12 pieces. What we are doing with our clients is a puzzle of 500 pieces. This is really the big art. I mean, it's a heck a lot of work. And that's why I told you when we set up this meeting, I'm available Sundays and Wednesdays for Tesla. Those are my 2 days where really, I try to fit my family duties in there and my Tesla passion in it, because the other 5 days I'm really fully dedicated to my job, and I love what I'm doing, but it is a heck of a job.
Oh yeah. Well, we appreciate all of the time you have given us. So thank
Thank
you
you.
so much. So now getting into the credit ratings. So this is something that obviously Alexandra has stirred the pot up with, and we absolutely love you for doing this. So getting into the basics of it. So the credit ratings itself. So what is the basis behind the credit rating? Because a lot of people that have followed my channel are some are more on the basic levels. So what does the credit rating mean to Tesla and to any other companies who are trying to get from junk rating to investor grade?
Okay, well, let me explain a little bit. So this credit ratings are about 120 years old. This all studied when John Moody, so Moody is the name of the gentleman who did it, left Wall Street because they were selling bonds there, like already now, but these bonds were for the railroad expansion into the west of the United States. So people at Wall Street obviously had no clue whether the bit from Kansas to St. Louis was better managed than the other one that was going from there to there, right? So he traveled around the country, spoke to the foreman and checked out the crews, looked how they worked, and then went back to Wall Street and said, okay, so this is the best one, I give them AAA. This is the second one, I give them AA. And so that's how this whole thing started. And then about I'd say 30 years later, he went bankrupt, John Moody's, which is actually funny, right, in the whole story of things. So when he went bankrupt, he was clever because S&P had started copying what he was doing, and S&P said, look, rather than going bankrupt, we actually need a competitor. How about you sell us the licensing rights for the AAA, triple B, and whatever, and you find other ways of, naming them, and that you stay alive, and we take over the AAAs. And so that's what happened. And from that moment onwards, S&P and Moody's had, similar terminology. So S&P now used the AAAs and AAs and triple Bs and double Bs, and Moody's called them triple and then not capital A's, but small letter A's or whatever, and then did not triple B's, but BAAs. I mean, it's completely ridiculous. But anyway, so they were still matching each other, and and that actually happens for a long time. They still have about 96% of their ratings that are exactly the same levels, right? If you check ratings, you will find both of them. And that's what gives them actually the strength, because at the same time, the SEC had rules in place that certain foundations, certain pension funds, certain investment funds had to have only investment grade ratings, and they needed to have it from 2 rating agencies. And since these 2 rating agencies walked in lockstep, right? So that they actually had the market, and a couple of other younger ones were coming in. Fitch was the first one. Fitch is a French company. Then the one we set up is still alive. It's called Scope, and that they're doing quite well in Europe. But the whole thing was really from the beginning very coordinated. They know very well how they keep the market to themselves, and so the line was always that triple B upwards, triple B, single A, double A, triple A was investment grade, and below triple B was junk. Well, nicely called speculative grade. And for growth companies usually search at one moment a rating. Why? Because if you do a bond issuance, that's what a credit rating actually is. It is the probability that this issuer may or may not default during the life of the bond, of the obligation to pay back. So that's the calculation behind it. And usually, usually it's very linked to statistics, right? You look at indicators, financial indicators, debt ratios, whatever, and you see whether there's a probability of default. And then they do, because that's, in the good old times, that was sufficient, just because financial information was not readily available, right? Everything was on paper, had to be filed with the SEC. Nobody was going there reading it. So they were the only ones having the hand on the information. Now this information is readily available. And so the latest 15, 20 years, they have become masters of telling everybody that they now have a qualitative overlay over this all. So you have the quantitative figure crunching that actually anybody could do, but they are so well versed that they also look at the quality of the company to determine whether it would go bankrupt or not.
Okay, no, that's great information. So, and I know that's what obviously we're talking about, with Moody's, when they're talking about, hey, Tesla needs to have more vehicles out there, and it's like, but do they really, or is that more of Moody's just kind of trying to skirt it because Tesla's not paying them because of that's how it works? So how much?
Yeah, I mean, there are a couple of reasons why I think they don't want Tesla to go up too quickly. The first one, let's face it, they're very bad on growth companies, right? It's much more easy for them if they have a company that has for the last 15 years just stable numbers, everything looks the same. Well, then you can say, well, it's going to go another 5 years like that, just because the routine gives you that comfort. Growth, meaning the speed of growth is something they just can't capture. Moody's analysts, I mean, I was then already, and that's 20 years ago, with my big mouth and my enthusiasm and my entrepreneurship, I was already then not the typical Moody's analyst. And I was always wondering when I went, it was in Church Street at that moment, when I went into these gray offices with these gray people sitting behind their gray desks. I mean, it is not a fun universe. So you can just not imagine that these people even get a grasp on what Tesla is all about and how disruptive to the whole industry it is. But even if you don't catch FSD, and even if you don't understand that software is stronger than hardware and all that, you still would have to keep up quarterly with Tesla just to understand what's happening. And obviously what they don't do that. They don't look at it quarterly. They look at it yearly. And in a year, so much can happen. So I've been screaming the last 3 quarters, but it is true, the last 3 quarters, obviously nobody really looked at them. S&P looked at them for the last time last year in October. So it's up again this year in October. And that was Q3 2021. So that's like, sounds like ages ago, right? We're not talking about the same numbers anymore.
A lot has happened since then.
Exactly. And I just don't have the feeling they even catch up with it, because it's true, a normal automaker, nothing happens in a year, right? I mean, if you've been an auto analyst all your life and are used to the rhythms of the Ford and Volkswagen and GMs of this world, you would not expect that much happens every quarter. Yet
But
we
that's
know
why
it
the
does.
offices are gray, because it's so bland.
There you go. There you go. So yeah.
And that's why I figured last year, like my prediction was we were going to get the credit rating upgrade to investor grade sometime around the end of October, because that's when they look at it. So I figured that, and it sounds like, the video that you showed the other day about, Moody's and S&P discussing it, definitely sounded like S&P is on board with it. They just kind of want some more, hey, give me another quarter just to make sure we've got this consistent growth going on and we're good to go. Moody's seems like they're kind of a little more moody. And so it just kind of seems like that's the direction they're going. So it definitely seems like S&P is going to upgrade. And of course, Elon's saying, it's Moody's is irrelevant. Do you think Elon said Moody's is irrelevant because S&P is going to upgrade them? Or do you think Elon says it's irrelevant because he thinks that the whole system is so corrupt, he's trying to actually do it without the system?
I mean, knowing Elon, it's probably the second one. I do believe he thinks they are all irrelevant. But an issue that's up for an upgrade gets information from, I think we have an echo, gets information from the rating agencies a couple of weeks ahead. So it could be that they do know from S&P that they're up for an upgrade in the very short future. It could be that he had that information, and he doesn't seem to have, or Tesla doesn't seem to have a really tight relationship with Moody. So that could be his thinking as well. I do believe what could motivate this whole thing, remember in May, and I know we're getting to ESG a little bit later, in May, S&P ejected Tesla from their S&P ESG 500 index. And I do believe, I mean, that was completely crazy, right? Now, ESG has nothing to do with the automobile rating analyst. S&P is a huge business, right? This is a $10 billion of revenue, annual revenue company. So the ESG little group has nothing to do with the automotive rating analysts. But I do believe that somebody at Tesla, if it's not Elon himself, took the phone and told him what he really thought about that. And it could very well be that S&P then said, look, we're looking out for your credit rating and whatever, because this is always a give and take. So I do believe there is a relationship between Tesla and S&P, who knows they have to make up for their huge error of May, and so that may help us for the upcoming rating upgrade.
How much of the credit rating would you say does it come down to there not being enough data yet? Do they not have a big enough sample size? And you kind of hinted at they want to see a couple more quarters or years even of stability. I mean, is there a typical amount of time that it took for some of those other companies that do have the A ratings? Have they stated any legitimate reasons for not giving Tesla a better rating?
No, I mean, honestly, it could have happened 3 quarters ago. I started publishing that table in February for Q4 2021. That was already a quarter where it could have just happened if somebody was on the ball and willing to do it. Now, you can always say as a rating agency, oh, I need more confirmation. I need another quarter. I need another. I mean, reasons to not upgrade, you find them every morning by waking up, right? It's just, that's so easy. I do believe now their reasoning is getting so thin, especially S&Ps. I mean, Moody's was always irrational. More models of cars. I mean, what's that? Excuse me. And so go and speak to your Apple analyst and ask them how many models of iPhones there are. This is completely ridiculous. But I do believe it was just a matter of getting motivated to do it. Maybe also get the green light from the hierarchy to do it. And that's why I do believe this may be linked so much to, them making up their mistake from the ESG rating, thinking, okay, the hierarchy said now, we spoke to Elon, we made a mistake, you got the green light to go into it now.
Do you think there's anything, that Tesla can do to further improve their chances? Like, could they make the argument that anything Tesla's lacking, or do things like, the Twitter overhang and the uncertainty around FSD, like, do those have any effect on this?
Well, they pretend no, but I can tell you one thing that will make it happen instantly, and made it happen actually in 2013 for Apple, is if they do a bond issuance. I mean, there is back and forth in the Twitter sphere whether Elon ever would do this or should do this, or whether that's actually, playing their game. I actually think it's gaming their game, which I think I'd love him to see doing that, because obviously Tesla doesn't need the money, but by issuing a bond, may it be small, may it be bigger, believe me, they would immediately find a high investment grade. But while by just, sitting it out now, I do believe they will be investment grade, but lowest investment grade, meaning BBB, right? If they would do a bond issuance, it would certainly be straight away a AA. So that's where the whole corruption comes into place, right? If you start playing their game, they pretend, that you now give them more data access. They're not only doing it on publicly available financial results, but now they are working with you to better understand you, right? I mean, what is there more to understand? But there you go. But that's the whole argument. And now that we better understand you, yes, of course, you're AA, or yes, you're AAA. So, but obviously there you pay for the rating for that bond issuance. So my gaming the game hope was, and still is, issue a bond, use all the proceeds to do a share buyback, because that'll drive them even more crazy, because that puts the PE ratio even higher, right? Because now you have less float in the market, which is, I mean, it doesn't really make a difference into their cash position, but it just would give you all the benefits. Yes, you would play the gravy train game with them and give them a little bit of what they're waiting for, but you have all the results at the same time. Now, is it financial engineering? Is it unethical? Yes, it is. Sure, it is. Yeah.
And that's part of why I'm wondering if Elon is just not doing it intentionally, because, just like he wants to get Twitter to have, kind of like straighten out politics, like enough of this junk, enough of this garbage that's out there. We can do it without you. I mean, they basically have no debt right now as it is. I have no doubt we're going to see Q3 numbers that are going to have zero debt. I mean, they're, I think, $66 million in debt. That's nothing. That's pennies. So I'm wondering if they're just doing that, and Elon's like, screw you, we'll just pay for everything in cash. We don't care. We don't need your credit ratings.
Yeah. And I mean, and that's actually I think the first or second tweet that Elon answered to me was to one of those tables. And he replied, said, yes, this is completely silly, but, don't worry, we don't need that. We don't need them, and we don't have that, which is true. They don't need them. There's no doubt about it. And I mean, I feel very motivated to call them out, because it's so obvious, I mean, not calling them out here would be, I would feel I'm, dirty and doing a sin by not doing it, because I feel this is the most blatant abuse I've ever seen. I've looked at rating agencies for 25 years now. This is really evident that they're abusing their power. And I think, on top of it, rating agencies, time has gone, right? They've had their glory times. And the SEC is very slow in finally doing what Congress asked them in 2010. where they told them, tell everybody they shouldn't use rating agencies anymore and credit ratings anymore for their analysis. Now, 12 years later, that is still not fully implemented. So I just want to call everybody out and say, look, we all know they had their responsibility in 2008. We all know it's still going on. Look at my table. So please just, this is it now. Let's end this.
Do you think we're ever going to see another credit rating agency, like maybe Fitch does make a turn and somebody focuses more on the growth aspect of companies rather than the value which we are currently seeing?
There should be. I think that actually there's a huge market for a credit agency in growth stocks. A sort of a ARC, but not as a fund, as a rating model, which is quicker on their toes, which has the right approach of understanding technology, but which puts out indicators that are easier to read. And they're worth it. There is no doubt. It's a complicated business. It's much more complicated getting the growth stock right, just because bankruptcy is so close on the, to reality. But that is what is much more needed than rating value stock. I mean, value stock is it's ridiculous, and it's a gravy train. That's all it is.
Oh yeah, and I'm well aware. Obviously, with growth stocks, there's a lot more risk involved, so you've got to be a lot more diligent with your research on the company to make sure that they're not going to default.
But that's where the value comes from, right? That's why you would actually really bring value to the table by doing it.
Yeah. Hey, maybe Kathy and Gary can get together and make their own rating agency.
Exactly.
So actually, the first question we got was, going back to the buybacks. Do you see a buyback without investment grade acknowledgement? Does it need the first one to? Does the first one need to be the other?
Very good question from Eric. Not at all. They can do a buyback any day. They can buy back stock. They can retire that stock. That's what I hope they will do when they buy it back, because there are two ways of doing buyback. Either buy it back and add it just as a cash position to your portfolio of things that you hold. Now you suddenly hold Tesla stock, right? That's not what I want them to do. I want them to buy it back and retire that stock. So that stock doesn't exist anymore. And that means the float overall gets reduced. And that brings more value to each individual stockholder, just because there are less stock outside now. And they can do a buyback anytime, has nothing to do with the investment grade. It's just that if they have so much good usage of their money at the moment, like buying gigas, now maybe going into mining and whatever, maybe a good use of gaming the system could be by this investment grade bond issuance, but they don't need to do that at all, no.
So basically, the second way of the bond issuing is and the buybacks is similar to what the Fed is doing right now, which is pulling money out of the market.
That's exactly what it is. That's exactly what it is.
Let's see here. Let's see if we got any other questions. And we're going to slide over to ESG, because that I know is the next thing that you said you're going to be focused on as well. Because ESG is another one that, and of course, when they got pulled out of the ESG, that it didn't really hit the stock all that much, but it is kind of silly that they got taken out based upon who they are.
Especially how it was done. If you allow me to recap that a little bit. So this whole ESG rating that has built up the last 2-3 years is a very good way for these rating agencies to find now suddenly a second living, right? We just discussed how useless over time these credit ratings become. And so ESG is the hope on the horizon that is going to be the next gravy train feeding them. So they're like crazy people purchasing all these little boutiques that have specialized on ESG data collection, on ESG methodologies of how, making something out of it. So especially S&P has purchased a couple of these teams. One is a Swiss little group, and that Swiss little group is the one that became the official rater. So what do? They send to hundreds and thousands of companies a questionnaire with all these ecological, social, and governance questions. Most of the people don't answer, so they try to derive this from financial publications, annual reports or whatever it is, or press, and then putting in their scoring models. And then since they're S&P, S&P also has the indices. So the S&P 500, we all know, that's the 500 largest market caps in the United States, right? And so, what they did is they used the same 500 and now gave each of those 500 an ESG score, but if this ESG score was below a certain threshold, which if I recall it right was 25%, it's been a while. So if it was in the lowest quarter of their group, so all the automotive companies came into the same group and the lowest quarter was cut off, then they were thrown out of this index. Okay, so obviously that what happened in May is they had all the 500 companies, number 5 was Tesla, and then they grouped all the auto companies together. GM was the first, the best in ESG, and Hyundai was there as well, and BMW, they were all wonderful. And then there was Tesla. But at that very moment, Tesla was not yet in the last 25%. It was in between 25 and 50%. And that's where they did what they call a stakeholder and media analysis, where they looked at the media and found suddenly that Elon doesn't have the best image in the media. Are we all surprised? And there they decided, subjectively just by them, that, oh, this is so bad, stakeholder and media analysis, let's throw them out. And that's what happens. I mean, it's just absolutely ridiculous. I've never heard anything as ridiculous. It was a mistake, and they loved it. The first day they published it out, they were proud, parading as if, they have done the world the biggest service ever. And then it backlashed. It backlashed to the point that 2 months later, there was Wall Street is a cozy little world. There was a best ESG rating award ceremony for which they were initially nominated. And then after that May debacle, they were kicked out and somebody else became the best ESG rating thing. So Wall Street understood what was happening. And I think S&P for ESG ratings will have to be in quarantine for a while before they are back into the scene. But the whole thing was just absolutely ridiculous. And you do have to know there are funds indexed on that S&P 500 ESG index. So all these funds on that specific day in May had to sell Tesla stock. It wasn't obviously enough to move the market enormously, but there were millions and millions of stocks sold that day because they just arbitrarily decided the stakeholder and media analysis wasn't up to their liking.
Yeah, and it drives me crazy because, I mean, like you look at it, and you can see blatantly the corruption. You're like looking at the companies that got put into it, and then Tesla getting taken out. You're like, it makes no sense whatsoever. Like everything Tesla does, and I love the news we got recently about Giga Nevada and how they're really focused on the water, the clean water over there. It's like that's what their big focus is on everything that they do. So to have it, taken out, the timeout.
It's completely arbitrary. It was a big mistake. They are punished by Wall Street for it. I mean, we don't see that, but believe me, they are. But it shows their little power, right? And that's what it is. It is a little power game because what do they want? They want Tesla and so many others to participate in those questionnaires, to pay for advisory, to understand how they can back into it, and blah, blah, blah. This is a really dirty game. It all looks very polished, no doubt about it, but it is. That's what it is.
Very much like, advertising is the same thing. You look at the media, and as Gary said himself too, it's like, a good journalist is going to put out the true story anyway, but when you're getting paid by somebody, the story may have some different wording, maybe a different headline, and it's going to make a huge difference. So if you put your money in somebody else's pockets, then it's going to definitely help you out. But if you don't, then you just got to do it the hard way, like Tesla's doing it.
And you're actually right. You're right. It's a very good analogy. You're saying, rating and PR in the media is not far away. It's probably the closest industry there are. People often ask me, why you're so at ease on camera and whatever. When I was in that rating industry, I was as much on TV as you can imagine, because that's what it is. You have to talk about these ratings, you have to make them understood. Mine was a completely other world. It was real estate investment funds and trusts. And I made a whole scandal as well because I told them what a crap it was, because I love doing scandals. I mean, I'm a bit of a big mouth, I have to admit. But anyway, the one thing I want to make sure is rating is as much PR and how you package it than it is really the quantitative or qualitative analysis about it.
Yeah. So now, when does the next ESG rating come up? Is it annually also?
That's a very good question. So the thing is, it was annually in October. Okay, it was annually in October until it was not anymore. And so in April, Elon announced he was interested in Twitter, and then this annual in October suddenly became May. Nobody in the world understood why it became May, and in May they just got thrown out from one day on the other. So my big question is, are we now back next month in October to our old annual October, or are we now suddenly back to May because now it's May? I have no idea. I cannot tell you this.
We're gonna have to find that out, because that's interesting. And obviously, as we said, it doesn't make a huge difference. Like, that's not something that moves the stock like a credit rating or getting included into the S&P itself. But it still is significant. It's something that obviously Tesla should be in. So it'd be nice to have that back as part of our repertoire.
Yeah, and I really am looking with astonishment how they will get them back in. I mean, can you imagine what they have to come up with now after such a crappy story to get them out? Now what do you say to get them back in? It's like, we made a mistake. No, that's not an option.
Oh, I know. I mean, because maybe they're gonna be like, well, Tesla with the wastewater, now they've proven themselves, they're good to go. I mean, like, what are they gonna do?
I don't know. They'll make up a story, but it's gonna be funny. We're gonna have a good laugh.
Oh, I know, for sure.
It's amazing to me how far the problems with ESG extends, even just beyond Tesla. I was reading an article in the Wall Street Journal the other day that was really interesting. Apparently last month, 19 state attorney generals wrote a letter to the BlackRock CEO warning that BlackRock's ESG, environmental, social, and governance policies involve rampant violations of the sole interest rule. And so for those who don't know, the sole interest rule is a legal principle that requires investment fiduciaries to act to maximize shareholder returns and not to promote social or political objectives. But wait, it gets even better. So you've got the big three asset managers, obviously BlackRock, Vanguard, State Street. They're all selectively promoting this ESG criteria when it comes to US companies, but not the Chinese companies that they invest in. So for example, BlackRock is the second largest shareholder of ExxonMobil. Last year, BlackRock led an activist campaign to force Exxon to cut oil production. Brilliant. Without disclosing that the oil fields being dropped by Exxon are now poised to be acquired by PetroChina. So the U.S. is getting rid of its oil assets to give them to China. And then to top it all off, guess who is one of PetroChina's largest investors? That's right, ladies and gentlemen, none other than BlackRock. So now not only is ESG investing sabotaging U.S. companies, it helps our adversaries. I mean, you can't make this stuff up. And BlackRock owns, I believe, 1 to 2 trillion shares of about 5 to 10% of PetroChina.
Yeah, I think there is no bigger spam out there than ESG. And I've said this a couple of times, and I really love it, reiterating it. I have no idea who that genius was who put those 3 letters together, because they should not be together. I mean, I fully understand that some people may have, may want investments in funds or whatever that have a high governance level. I mean, MEETs would be the last thing. I hate governance and anything that's administrative, but whatever, if that's your priority, you should find funds for that, or that have a high social responsibility, right? If you're a social warrior and feel it's important that, I don't know, it's a women-led businesses or minority-led businesses, fine for that. But what does that have to do with the whole environmental issues, right? So they stuck these 3 together somewhere early 2000s, and that is it. And then for 10 years, it was more or less sleeping. And then somebody woke the giant up, and now we have it. And the one thing I'm really very, very vocal about, and I want to make sure everybody understands this. At the COP26 last year in November, President Biden and the 25 other states missioned what is called IFRS to put in place ISSB. I'll get into those in a moment. So ISSB is now a board. They have already 3 or 4 directors who are thinking about how any company in the world who is doing financial results, who is listed on a stock exchange, has to address ESG in their financial reporting, meaning they will have to publish all these details about minority jobs and about how their governance is, what handbook they use, whatever, in their financial reports every time they publish them, right? So this is ISSG. And then this board that put that in place, IFRS, these people, that's a foundation. So COP26 missioned this foundation. Now, when I looked at the foundation initially, I said, yeah, that's states, right, doing this foundation. Not at all. This foundation that, is at the head of all this pushing what needs to be published and whatever, is a foundation of certified accountants and a lot of companies, a lot of petrol companies, a lot of traditional OEM car companies and whatever. So these people pay a lot of money every year in this foundation, having the influence to tell ISSR now how they have to disclose financial information. So Tesla obviously not involved in all that, and will just get screwed again, sorry my French, by suddenly having obligations to publish data the way these companies decide it should be. Meaning we're not playing actively here at the same table. There are people out there now deciding what type of data for ESG should be published. And if you're PetroChina, or if you are Exxon, or if you are Mercedes or BMW or Volkswagen, believe me, you don't want Tesla's ratio in those financial report. You want your definition of stuff in it. And that's what ESG has become. So we're very far of improving the world. We're very far about, getting better. This is not about this at all. This is about a gravy train that suits those that are paying it.
Yeah, that's what drives me crazy. And that's part of me thinking why Elon is just, not caring, because it should change. And I'm curious, as we shift over the next decade, as many people are seeing when it comes to, switching over to renewable energy, these companies like the petrol companies and everything, are they going to end up not having the sway that they had before, because they're not going to have as much of the world being as dependent on them? So are we going to see a massive
that's why it's so
disruption in that
important.
also?
That's why it's so important that Tesla grows so quickly, right? If Tesla really outgrows them at the speed we all expect, then maybe he's won that game, because he's taking the game just a level much higher, right? Rather than fighting at the table with them, saying, look, stop the crap, that's not how we should publish it, let's publish real numbers and what's really relevant. He's not even playing with them at that table. He's taking it higher, making them redundant. So if that works, yes. If that doesn't work, well, then we have an issue.
Yeah, instead of fighting at the table, he's making his own table. And I'm wondering if part of the reason why he's getting Twitter is for a lot of that. Looking
sure.
at,
No doubt
going back to the beginning when he said, he wanted to create X.com, and have this giant X holdings company. That was actually a part of it. It wasn't directly related, but as he said himself, his four companies aren't really directly related, although we know that they are. So, and I think when it comes down to it, it's going to be a huge piece of that. And when he can get into the social media aspect of things and actually, look at all the corruption he's disrupted already. You can literally see decisions that are being made and just blatantly show who is in whose, bed. And it's crazy to see all that. And he's doing that. So I'm whether it's ends up being Twitter or not, I have no doubt he's going to create his own social media platform to be able to make a lot of this happen over the next decade.
Yeah. Do you think the Twitter deal is going to go through or not?
Well, I think, as Gary said, they've got the shareholder vote coming for Twitter on Tuesday. So if that vote ends up going through, which it should, because why would any shareholder for Twitter not want Elon to have to buy it at $54.20? So obviously it's going to go through. So whether they're going to come up with, between today and tomorrow, some sort of, deal on the outside, some sort of agreement that's going to be less than that, I don't know. I mean, Elon, I check every day to see if he has sold his Twitter shares, and obviously he's not going to until this has been finally ruled yes or no.
Yeah.
And we'll see when that happens. Yeah, I don't know if it's going to go through. I'm kind of in the camp with Gary, thinking that we are going to see some sort of lowered deal and he can buy it for a little bit less. But I think he's still going to end up buying it. And I think right now, I think before he thought that, hey, even if he bought it with all the bots and got it at a cheaper price, at least it's got, the followers that are there, everybody who is on it and the users that they have, he's got that user following. But if he created his own, the 100 million, well, it's probably 20 million because all the rest are bots. But at least all those people would come over, to his new platform and be able to go over there. But I'm sure, I don't know if it's in Elon's eyes easier to create a new platform or, because obviously we saw Trump try and not do it so well. But, I don't know if he thinks that or if maybe Twitter taking it would actually be better. I don't know. Either way, I think it's going to be beneficial. I'm on board with it. I'm on board with him getting a social media platform of one way or another.
Yeah.
The whole Twitter thing has been just fascinating to watch how quickly it went from they were trying to do everything in their power, the Twitter board, to stop him from buying the company, to what flip-flop the next day. Please, take the company. No, we want you to have it. I feel like there's a lot going on under the hood there, and I am really curious to see the legitimate number of users if that ever comes out.
Oh, I know. And I think about it too, like And like I did a quick test the other day. I don't have many followers yet, so it was easy for me to go through. At the time, I had like 656. I quickly scanned half of mine, and 6% of that half, based on all of them. So basically, it came down to about 12.5% of my followers were bots. And I'm a small guy. So as you start to build up your followers, it grows exponentially. So, like Alexandra, you're probably at like
completely
15.
agree. It's absolutely crazy. I'm now at 13,900 or something like that. I'm looking at it every day in amazement, thinking, "My God, what do all these people want from me?" Right? hope I can deliver. But then I also, when I look at them, I don't know how many it is that have 0 follower, 1 follower, 2 followers. So are they all bots? Are they not? This is crazy. And then sometimes overnight I have 100 more people. I mean, where do these 100 people come from? I don't know where, how it happens.
Well, it's because you're so awesome. That's clearly why.
Sure.
But it's funny you said that, because and I can go through quickly, and like you can see it, and I know you guys have both seen it. You go through and you can easily see who's a bot and who's not. Quickly. I mean, some other ones you have to dive into, but very quick scan, I can see who it is. So there's probably a lot more than I didn't even pick up on, because I'm like, no, she's definitely not real. And I was like, you can easily see all these bots.
So do you block them, or do you let them there?
I don't. I purposely have not been blocking, because I kind of started it. I started being on Twitter more active when Elon was going to buy it. So I'm like, let me do a quick test on the bots. So I'm purposely not deleting any, so I can see who's in there and what I actually have for bot counts. Because, if you block one, it's like Hydra, you block one and 2 more are going to take its place.
Oh, yeah. That's exactly what happens. That's exactly what happens. And I have now, with my newfound fame, I have these messages from people that I'm not connected with, right? So I have these messages that just say hi or dear or whatever. So somebody told me just block and delete them. So first day there are 3, next day there are 5, next day there are 15, next day there are 25. It is crazy. Absolutely crazy.
Yeah, and it's like that on YouTube also. And like I've been seeing, I know Farzad had mentioned it himself, it's nuts how many there are. And like for me, I want to try to respond to all of my subscribers, respond to all the comments. I'm spending so much time trying to get rid of all the spam. I'm like, I've got to let it go. So I've got to let everybody know, hey, spam's going to be on there. Unfortunately, I can't spend all of my time trying to get rid of it. It's crazy how much of these it's on YouTube. It's on all social media platforms.
You could do all day, right? You could do it all day long.
Oh, it's absolutely insane how much is out there. So I know it's going to be out there, but if somebody can figure it out, and and as far as I mentioned too, it'd be nice to have a competitor to YouTube. If I can be out there, and have that, they don't have a true competitor.
And there's so much crap, and I've seen nothing worse than the comment section of YouTube, right?
Oh, yeah.
You feel like in an old Lotus system where reply and then it doesn't reply in the right lane, and it's so antiquated. I've never seen anything. And if you put in your comments a link to any other social platform, they obviously censor you. I've tried that a couple of times. People were asking me, "What's your Twitter handle?" I put my Twitter handle there. That comment gets thrown off. So obviously YouTube does a job in cleaning up when they don't like it. But do you think they would clean up all these WhatsApp bots and all this other crap?
Oh, I know. And the WhatsApp ones, at least if there's because you always get there's one that pops up, and they're getting pretty good, because some of them, they'll write something that I'm like, oh, you know what? That's actually legit. And then I was like, oh no, that's not legit. Then certainly, then all of a sudden crypto and Bitcoin come up, and there's 28 responses to it. And I'm like, what is going on? It's absolutely madness. And I try to do my comments through the studio, and it's not too bad, but yeah, it's not. The bots are absolutely insane, and YouTube definitely needs to update its comment section. I know they're working on updating some things. It's slow. Everything is just so slow. Why people need to upgrade faster. I don't know what's going on. So hopefully Elon can straighten some of that out and put some competition and make it work. Let me go through some of the comments in here, because there were some questions that some people had.
There's definitely a lot of potential with Twitter. I think in the long run, even if he paid the $54.20 and it's kind of overpaying with the bots, he'll obviously make it into something far superior than what it is today. And another thing that I've thought about that's really interesting is, you look in China, they have these super apps where you're doing everything all in one place. And that's kind of what I could see happening with Twitter. I think the closest thing we have is Facebook has kind of started branching out into this. You've got marketplace, they've got a dating thing, everything in one place. I could see Elon Musk making Twitter more in line with, you mentioned X.com earlier, and kind of his vision for PayPal originally, kind of like an all-in-one place app where you can send money,
academia.
You could ride hail, you could do lots of different things. It could even play into Tesla's robotaxi network. You could call them from the Twitter app.
No, I agree with you. I think that there is a lot of usage there. I think his whole academia courses online, TITS project could be on a social platform like that. The whole, YouTube, the fact that videos on YouTube you can't store, you can't comment and whatever, is complete crap, right? There's so much room for improvement. There's no doubt about it, and he'll make it happen if he gets it. I just hope he doesn't have to pay 54.20 for it. But I do also believe he got himself into a lot of self-inflicted mess here. I mean, allowing all this without due diligence. Oh, and that brings me actually to a question. I had somebody texting me prior to this call saying he would like all three of us to answer the question whether we trust Elon. And that was going on and on in my head. So I let you start. I know what I want to answer because I was thinking about it all morning, but go ahead. Do you trust Elon?
I'll take this one first. I got to say, for years and years now, I've been studying Tesla, all the reports. I've read, there's like 2 books out there on Elon Musk that I've read. Just seeing what this man has gone through, he's either the greatest actor on the planet or he's genuine. And there's no reason for me to like doubt what he has said, So I do trust him, and I do think he acts with genuine intent. And it's just really fascinating to me. You compare him to the closest, person is probably Jeff Bezos, who clearly is more of a New York Wall Street mind, who now, left Amazon. He's got his super yachts. He's got how many mansions? What does Elon Musk do? He's the richest man in the world, and he sleeps in a 1,000-foot bungalow. And when he's not sleeping there, he's sleeping on the factory floor. Like, this man has devoted his entire life to the betterment of humanity via Tesla fixing Earth, creating a sustainable future, and SpaceX make us multiplanetary. Like, that's his life. Most people get $100 million, they go buy an island and they're gone. So the fact that he is still this heavily involved, and no one has the work ethic to match him, I don't think. Yeah, I think that he's a genuine person.
Yeah, I'm in the same boat there. After watching enough interviews with Elon, going all the way back to the beginning, 2003, 2004, he is who he is. And, he said it himself, you don't have to read between the lines with him. You just have to read the lines, and I think part of it, because of his autism, is he doesn't know how to do anything other than be direct. And so he is direct as he can be. We even see him in interviews, like he wants to share more, but he can't. Just like when he sold his shares last year, if the SEC allowed him, he would have just came out and flat out said, hey, I've got some sales of my stock coming up, just so you guys are aware. No other CEO on the planet is going to do that. You're going to find out through a Form 4 filing. That's exactly how you're going to find out. Elon wants to give us information. He wants to let us know what is going on. He's also human. He makes mistakes. He's not perfect. So yes, I trust him, but he's still human. So you got to understand that the guy's going to make mistakes, and he's super high profile. So, he's going to be under a lot more pressure. But I totally do trust him. I trust his vision. Some things, obviously, I question. But hey, he's doing what he feels is the best for humanity and not just for himself.
And I think another. Go ahead. I think another really interesting part, like another big criticism I see, is people, say, oh, this is vaporware. FSD is never going to come to fruition. This is never going to work. Well, they've been saying that if you go back to Tesla's inception, EVs, it's never going to work. And since the beginning with these master plans and his interviews, he's been saying exactly what they're going to do and then proceeds to do that. So it may take a little longer. And so maybe they don't get to 20 million vehicles delivered by 2030. But by having that goal, they're going to get a lot further than the competition, who's saying by 2035, 50% of our vehicles are going to be electric. So I feel like, we need to be patient. And obviously, he thinks everyone can work like him, 24 hours a day. And the reality is there's hurdles, unexpected things come up. FSD, this is probably the most revolutionary technology that the human race has yet to come up with. I mean, real world artificial intelligence is what they're trying to solve. There's going to be hurdles on the way. Like he said, there's been so many false dawns where they're so close. And I'm sure there's going to be like these freak scenarios that it's going to take time. But having said that, the fact that it's not just some pie in the sky idea of like, oh yeah, we're going to have full self-driving cars 2030. The fact that we're watching it in real time clearly drastically improve with each update, that's what really gives me the hope that like, they're getting there, and it's just a matter of time. And who's to say? It could take 10 years. It could take 5 years. I mean, there's really no way to know. And even, you look at SpaceX, the fact that to date, they've been doing reusable rockets for what, a decade now? No one else with government funding, the biggest companies in the world has been able to make their own reusable rockets. Like, what does that tell you? And you're going to doubt this man and this company who's already achieved all of this stuff that governments couldn't get done. If anyone's going to do it, it's going to be Tesla.
Yeah, one of the pushbacks that I get a lot too is everybody's like, Elon's doing it for himself. He's got all the wealth in the world and this and that. And I go, well, hold on a second. Like, how many other millionaires has he created along the way? How many other people has he helped along the way? Why can't both people win in this scenario? And truly, that's what it comes down to, is there's a lot of people who just believed in him and they also won. It's not like it's Elon's going to win and everybody else is going to lose. Yeah. Like, everybody is winning. Everybody who has supported him has won along the way. So it's not like, he's, kicked people to the curb.
Yeah, no, I completely agree with the two of you. My limit is that I can't see as far as him. I completely trust him with Tesla, and my money is in it. There's no doubt about it. I mean, will it be 20 million cars in 2030 or 2034? I don't even care, right? We'll get there. Maybe actually earlier, probably, but then we all think so. One thing I can't fathom, but that's just because I'm limited and I'm not giving him grief for it, is us going to Mars. That is just, I can't. I mean, good that he has the vision and that he pushes stuff that I can't imagine, but that doesn't shake my trust in him, right? I just think, my gosh, he's just so much further ahead. He's just so much more, believing in the capacities that we will develop to make it happen. So that's good.
Yeah, that's actually something that Dr. Jack and I had discussed as well, is the fact that, so many people who are bears or Tesla Q, the human mind cannot fathom, exponential growth. They can't fathom a lot of things. Like, some people just can't fathom, hey, we're going to go to Mars. Like, that's just not something your brain can comprehend. And so, then it comes down to faith. And it's like, hey, do you believe that he's actually going to do this? He's shown that they've done things before that have never been done before, reusable rockets, things like that. So do you have faith that he's going to be able to take us that far, or humanity in general is going to get that far? And a lot of people need to see, when you talk about, Wall Street analysts are like, all right, I can't see past 2025, let alone
they can't see past next quarter.
2035.
Exactly. They look last year.
Yeah. So everybody's just thinking, linear growth and not exponential growth. And it's just hard for the human mind to comprehend that. And if every once in a while you can catch a glimpse of it, you're like, I can see a little piece of that. And that's where you get the faith. And then you can see that Elon has come along. Look at, back in 2013, he basically projected all of the production that they were going to do for the next 10 years. And he was spot on with all of it. The man's brain knows numbers like nobody else. And so when you're looking at numbers, he knows how to get there. He looks out 20 years and then just plays it backwards. And it's like my dad explains it when he plays golf. He's like, all right, well, I'm going to go to the hole. My ball's in the hole. What do I need to do? And I play the hole backwards to where I'm starting. That's all Elon is doing when it comes to everything else. He's playing the whole entire thing backwards. He's like, I need to be in the hole. And what do I need to do to get there? And so that's when we get to lithium. And that's why we're getting to this bottleneck. And so we've got the lithium bottleneck going on. And, he said it before, hey, what are the bottlenecks? So that he's played this whole backwards and he sees, hey, we're going to get stuck here. Here's our next trap. Our trap is going to be lithium. So if nobody else is going to step up to the plate and start doing this, we're going to do it ourselves. And then you start looking at, like the chip supply shortage that we had. Guess who went through that and didn't have any issues? Tesla, because they figured out how to do it. They saw that issue and they resolved it. So now Tesla and Elon are seeing the lithium bottleneck coming up, and they're solving it now before we even get there. And actually one of my subscribers had mentioned there was an article that was put out today over in the UK discussing how there's a lot of mining companies right now who are intentionally not mining more to keep the prices high. And that's probably another reason why Tesla is getting into this, is because they know that they're not going to get the supply that they need because they're intentionally not doing it. And I think in this case, what's going to end up happening is it's going to end up keeping, because of all the corruption we've already talked about, I'm sure Legacy Auto has a piece and a role to play in this, is saying, hey, we don't have production as fast as Tesla is. If you can slow down the production of this to keep Tesla's production down, that'll help us out. And Tesla wants nothing to do with that game. So they're going to go out there and be like, well, you guys go play your own game with not having enough supplies. We'll supply ourselves. Thanks. So another reason, going back to the trust in Elon. I think he knows what he's doing. He's got the whole game plan set. I think he has a lot of cards in his back pocket that we don't know about.
Yeah, I wanted to speak to, I think it is fair to express skepticism on the whole Mars thing. Like, it's hard to even fathom how is this going to play out. But at the same time, this man, Elon, is like single-handedly has built the Mars colonization stack, right? He's kind of getting us all the pieces we need. Obviously, the rockets were the first part. I think this is really the end game for the Tesla bot, and where that will really be, crucial, because obviously, ideally, if we could send a bunch of robots up there that just, they just got to charge, they go to sleep and they charge, they don't need oxygen, can build, living quarters on Mars would be really ideal. You look at the Cybertruck, that thing looks like it's already a Mars rover, like it's ready to go, and even just, we look back at the rockets now that SpaceX, we can now send our own astronauts to space, to the space station. And for the last decade or more, since the space shuttles retired, what have we been doing? We've been paying Russia $100 million per seat to send our own astronauts to space. Now, is that something Russia's probably going to want to be doing these days? Probably not. Should we be relying on Russia in the first place? No. And so that's just yet another example. You think about all the astronauts we're sending up now. He's saving us $100 million in taxpayer money with every astronaut they're sending up. So, yeah.
Oh yeah, and then
and not sure the White House is sending a thank you card.
Oh yeah, I know.
Wouldn't hold your breath on that one. Yeah.
Well, that's because they want our taxpayer dollars for whatever they want for their own personal use.
Exactly.
And then thinking about, Starship going to Mars, full well that's going to have its own version of FSD. So it's not like you need a crew of humans to be able to get to there, so you just do what you need to.
But don't you sometimes feel that in all this, and again, all my admiration, don't want to downplay any of that, but in all that, the considerations of the retail investor are not so much taken into account. Sometimes I just feel when I hear people ask me, do we trust Elon? I trust Elon completely on the product map and on his vision and all that. There's no doubt about it. But sometimes I have my little grain of salt, and it's only small. I don't want to overplay this with, a couple of bizarre tweets or couple of cold shower moments where you just feel like, why is he doing that? Doesn't he understand, there are retail investors back here. There are people whose pension, they're retirees in their 60s, 70s, whose pension depend now on Tesla stock. And that's like I said, it's not even a beef, it's a grain of salt. But sometimes I just think that aspect, and it may be because he's just, so way out there in the spectrum and the genius he is, but that the retail investor gets a little bit lost in the whole scheme of things.
Yeah, I think that's definitely a very fair point. And I think that is a big problem, and, why people have this negative perception of both him and Tesla, because, this is the first time in history, this is where Twitter for worse, you have this instant access to this audience of 100 million people. Whatever thoughts, you're having, he's just sending out there, and then obviously gets sensationalized by the media. But I feel like, not defending it, yes, there's things he says, and I'm just like, what, why? But I feel like if we think back and if Da Vinci had access to Twitter, if Einstein, if Nikola Tesla had access to Twitter, they'd be tweeting some wacky stuff. And it's just part of what you get with the genius. And yes, that is a fault, and, not to defend it. And he pushes it sometimes. And I feel like that's just it just comes with the territory. And yes, it's unfortunate. Sure. And that's why I think long run, it probably would be ideal to have a CEO who would play the game and let Elon just focus on, like you said, product development. He'll still, be, company vision, doing it all behind the scenes, but maybe have someone on the calls who just tells Wall Street what they want to hear. Maybe that's the long-term game. I mean, I feel like the day probably will come where he steps down as CEO, and I'm sure he'll still, remain heavily involved with the company and focus on what he loves doing. He's said so many times, he's an engineer. He doesn't want to do all this
Exactly.
nitty gritty, day-to-day stuff.
And I say all that not at all because I want to devalue Elon. Far from me. He is the hero of my life. But because I also want to prepare people, if he ever wants to step back half a step or just concentrate more, that's actually probably the best thing to do. Don't be disappointed. Don't feel like, my gosh, he lets us down. It may actually be good. We have, for retail investors, for Wall Street, for this whole game of the game, somebody a little bit less passionate about it, just because that's how it works. I mean, is it important? Probably not. It's much more important we have an Elon in this company than anybody else. But I do believe we could do sometimes with a little bit less noise.
Yeah, and I know that was something that you guys have brought up on Farzad's talk with you guys, was just that, is, what keeps you up at night, what concerns you, and Elon not being there. And I think it's actually a good thing. Like, if I don't know if it's Zach Kirkhorn steps up or somebody else comes in to fill that role. If we have somebody who we know is going to fill that role, and then Elon can just Elon, and I think that would be better. I think if he's not being held back by the CEO duties,
Which he does
for
SpaceX, right? For SpaceX, he's not the CEO, so that it works. He has the example, and I mean, I do understand Tesla is bigger, but I mean, space is as important, if not technologically even more complex. So it works for SpaceX. Why shouldn't it work for Tesla?
Exactly. And I think, and I don't know when it'll happen, but I would imagine, I'm hoping by 2025. I'm thinking when my thoughts were, once FSD gets solved and robotaxis really hit the road, then he can step away, let somebody else take the CEO duties, and then he can really focus on AI and Optimus and really driving that next step. Because at that point too, SpaceX is really going to start getting themselves to, hey, we're going to start getting to Mars. He's probably going to want to focus more on SpaceX. So I would hope that sometime around middle of the decade, they'll find somebody else and really build that team, similar to how Apple had it when Steve Jobs was passing away. Having that team be able to come in is big.
Yeah, and one thought I had, remember when they had Fremont and everything was about, getting that factory floor to work as optimum as possible. That was Shanghai, then Shanghai had a couple of upgrades. And now we heard Elon say he was in Austin on the floor, he was walking Berlin on the floor, but you do feel that with every gigafactory coming up, it actually gets straight away better. I'm not saying it doesn't need improvement, but we don't have at all these childhood growth moments that we had with the initial two, right? You feel like they're growing up straight away as, the gigafactory, and will very quickly ramp up.
Yeah, and I know that, and I don't know if it's just because of Shanghai and how the people work over there or what, but obviously we know Austin and Berlin are slower to ramp, but maybe it's because they're also working on 4680s. They're doing things a little bit differently. Yes. But, now they've got a different floor map, and they're always going to improve. So every single factory they put up will be better than the previous factory.
Exactly.
And they already have
quicker.
Yeah, exactly. And I mean, looking at how fast Shanghai was, I mean, it's like, I don't know if you've ever watched Family Guy when, they're there and they knock down the barn and the Amish build the barn right back up. Like, that is Shanghai. Like, hey, they're back at work. All right, we're back up and we're running. It's absolutely nuts how quick they work over there. And it'll be nice to see, Berlin and Austin be able to get to that ramp. Because I know a big concern some people have is, well, what if Shanghai gets closed down again? Still they're at a point where they're, the meat and potatoes of the company right now. But Fremont, we've all just heard, they're pushing out about 12,000 vehicles a week over there. And once you get Berlin and Austin up and running, having Shanghai go down still won't be great, but at least you've got some backup. And then we know that we're going to hear about at least one more gigafactory by the end of the year. So that it goes pushing to the next level. And the more you have, the less dependent we will be on Shanghai. And I think we'll be healthier the more years go by.
Definitely.
Where do you think it's going to be the next one?
I'm guessing Canada. The next two I'm thinking are Canada and Indonesia.
Yeah, I was just reading, Quebec, Ontario. It seems like one of those two are likely. I would go for Canada. Yeah, would make sense. I think.
Yeah, I've got some subscribers who have given me some inside information going on up in Canada, and it sounds like they are pretty much pushing for it. Not sure of the exact location, but I think it's going to end up being East Coast of Canada, because that would supply the Northeast. Because if you're in the U.S., Florida is the next biggest market that Tesla's not in with a factory of any sort. Mm-hmm. But Austin can theoretically supply that market. The Northeast would be the next biggest. So if they've got Canada, they can supply the Northeast. That still falls in line with the EV tax credit stuff. So it makes a lot of logical sense to go with Eastern Canada.
Yeah, there's definitely
and the production site for cars, right? That's what we're talking about.
Yeah,
that would make a lot of sense just to, for Canada and basically up and down the East Coast, because at the end of the day, especially the Northeast, still very far away from Austin, Texas. So yeah, I feel like it makes a lot of sense, and that's obviously a huge market as well, as you said.
Yeah, and my Model Y delivery got bumped up, so I'm sure production must be ramping. I don't know where it's coming out of, but now it's going to be November 3rd to December 8th, so I've got to make sure I can push that off.
So you're trying to get the tax credit, right?
I'm definitely going to push mine off. So I'm not even questioning it. So mine originally was due back in March because I added FSD to see how much it would push it up, and it pushed it up to instantly. They're like, hey, your car's ready tomorrow. And I'm like, I'm not ready for my car tomorrow. So I ended up taking FSD off, and then they reset it, and it pushed it off to March of next year initially. So over time, it has slowly been moving up. And then they came out with the EV tax credit. So I'm sure a lot of people are pushing theirs off as well to next year. Mm-hmm. So that's probably why mine is moving up. So I have a
So,
feeling
so
when we
what
get
do you think? What do you think the what they're gonna do with the production now? Will they ship all these cars outside of the US if nobody takes deliveries here, or?
So I don't know if they'll push them off, because I think what's going to end up happening, it's not like they're losing the sales. They're just getting pushed off until next quarter. They're getting pushed off to Q1 of 2023. So I think what we'll end up seeing is we'll probably end up seeing a Q4 of this year that may be weaker than expected. So I think production will still be high, but we may see less deliveries, or maybe they'll do some sort of incentive on their own. They have a lot of margins they can work with. Maybe they'll work something out as well. I don't know. I think it's going to depend on how, they see their numbers. But if we don't see the numbers in Q4, we're going to definitely see them in Q1 of next year. And then, we have already seen a ton of castings over in Austin and over in Berlin, already anticipating possible, natural gas issues going on over in Berlin, because I know that they're going to ship all those giga castings over to Berlin. So maybe that ends up happening too. If they end up having maybe some issues in Berlin with production, maybe they start shipping them over to Europe as well.
Yeah.
So that could definitely be a possibility.
Because that's what I thought. I after the interview with Gary, I was thinking about it a little bit more, and I thought if they really see in October and November now much less demand in the US, they have the time to just put them all on ships and send them to Europe or South America or wherever, right? I mean, even if it would be hundreds of thousands of cars, there is a market in the rest of the world for hundreds of thousands of cars.
Yeah, we're not the only place who has unbelievable demand. I mean, the entire world is looking for them. So obviously it's going to be, a cost hit with having to ship out of the US to make it all happen. But, it's either you do it or you don't. And I think it's the right thing to do it if they actually need to make that happen.
Yeah.
But I have no doubt that we'll see that. Let me see. Let's jump into some questions here. So Optimus asking, if they do a buyback, will I lose my shares?
Optimus, not so Optimus question. No, you will not lose any of your shares. Let's say you had 100 shares. They do a buyback and you don't sell any of your 100. Somebody else sells, right? The market makers always have shares to sell. So you keep your 100. Not only do you keep your 100 shares, but also the float out there, meaning whatever was available to market makers, has now been partly absorbed by this buyback. And so there's less competition now, which should make the price of the shares go up. So your 100 shares will be worth more.
You own more of the pie.
Very much like when they take cash out of money out of the market, your value of the dollar goes up. Jerry, do you think Tesla should hold more cash before they do buybacks because of more factories being added and to protect against any force makers?
I think so.
I've said it very clear.
Yeah, I've said in the past too that, I would rather they play it safe and, if recession were to get bad or another black swan event, giving them enough cash to make it through a couple years, I'd prefer, because we know that if everything works out, there'll be plenty of money down the line for buybacks, and there's no rush to me. I'd rather see that money go toward gigafactories or even just playing it safe, having cash for if things get bad and demand does, go away for a couple years, whatever happens.
Yeah, I mean, they've got so much free cash flow coming.
It's crazy. Next year, I mean, there'll be hundreds of billions of free cash. You have no idea.
And I was running the numbers, predicting, thinking about how many splits they could potentially do over the next decade. In order to do so, they'd have to do buybacks, to get some of the shares out, or else they'd have, hundreds of millions of shares out there, and they don't want that. So, in doing these splits, they're going to do the buybacks, and I've got to run the math on it. But how much would they need to buy back, for shares in order to make up? And this is something that I don't know in my head either. So right now they've got, 6 billion shares that are outstanding. So if they do another 3-to-1 split, how many shares does that mean that they're going to have? So that can be 18 billion. Is that how that works? Or will they have to go out there and get more? So
no, you just double the number. But I mean, first of all, there will be enough cash, even after all capital expenditures. There's no doubt about it. But the second thing is also, what else do you do with the cash? You also have to look at alternatives, as Gary always explains. If you just have it on a money market account, that doesn't bring you a lot of interest. If you start paying dividends, I don't think us investors expect dividends. I'd rather have my stock price going up. So I do believe buybacks is an option. Now, if no buybacks happen, no problem. I mean, it's nice to have, but if Elon feels like, it's not an option. I had the feeling at the shareholder meeting when Gary asked him the question, he wasn't completely against it. It was just not yet ready.
Oh yeah, and I think the same thing. I think, they're probably looking at, the economic times we're in right now. We don't know what's truly going to happen. I'm sure he already has, knowing what's going on, probably at least 3 gigafactories that he's already looking at to spend money on. They've already bumped up their CapEx spending from $5 to $7 billion to $6 to $8 billion. So, they're bumping that up there. Things are probably just getting a little more expensive to build, whatever, it's normal. But, thinking about that, and they're still going to have a ton of cash outside of their CapEx spending. So then what do you do with it? Do you just keep on stockpiling this money like, Uncle Scrooge and have this giant vault of cash?
And it's burning away to inflation at that point. And, it boggles my mind to conceptualize basically today. And this number will probably, in all likelihood, continue to improve. If you look at Tesla's gross auto margins around 30%, the average sale price, let's say, is 50,000. Every 1 million vehicles Tesla sells, which they already have the recipe, it's just rinse and repeat at this point. Every 1 million vehicles they sell, they're making $15 billion in automotive gross profit margins. So a significant chunk of that ends up flowing into free cash flow. So if we just project out, not accounting for FSD, not accounting for Tesla Buy, if they just keep doing what they've already been doing, open another couple gigafactories every couple years, or 2 this year and whatever. I mean, just that alone gets them quickly to the point of $100 billion, like just crazy numbers. And then that's the time when I think it becomes a no-brainer. Yeah, they could start doing buybacks. And as far as dividends are concerned, Elon's kind of talked about in the past, dividends are usually start when a company's kind of crested the hill of their growth curve, of their exponential growth and whatnot, like Apple. Where Apple's at, they're growing. They're basically a blue chip at this point, and they have a dividend. I feel like the earliest that could happen for Tesla, maybe 2030. But, if we do look out, and if everything goes well, everything goes according to plan, there's a scenario that you may never need to sell your Tesla shares. And if you don't need the money until 10, 20 years from now, a few more stock splits, they start paying a dividend, and you may be able to live off that dividend.
Oh yeah, that's actually something I had.
Probably you.
Yeah, that's something I had done in a video, and I think my numbers were off because I needed to figure out buybacks. But let's say they do another 2 to 3 splits over the next decade, and then I was predicting, once AI, is solved and they've got Optimus out there, kind of where EVs are right now for them, who knows what's going to happen? Because we didn't, 3 years ago, Optimus wasn't even a thought on our radars. So who knows what they're going to come up with over the next decade? But let's say they don't come up with anything else. You get to 2032, you start paying out dividends, and having all these splits along the way. I mean, people are going to be getting paid buco bucks at the beginning of next decade in dividends alone. So, and that doesn't even include the growth from the stock price itself.
Yeah. Well, and one reason I think dividends is not really on his radar yet is that he doesn't need the money yet. If he would need, because obviously he's the biggest stockholder, if he would need money, that could be one way of not selling stock yet having a return. So maybe that changes at one moment in time.
Yeah, that's true too. And, I just thinking about how much, they still have to invest over the next decade. I can't, and dividends are one of those things where once you do it, there's no going back. Buybacks you can do on a whim. It doesn't really matter so much.
Except if you're called GM. Did you see GM? GM, they had dividends, I think, up to 2012. And then for the last 8 years, they didn't have any anymore. And now they're doing some again.
Yes.
They have the get out of jail free pass. And that was a good point.
Exactly. Of everything.
Gary had brought that up, that's what's nice about stock buybacks is you can kind of turn it on and off as needed. Whereas once you're paying a dividend, except in the case of GM, if you're a normal company and, you have to play by the rules, once you cut the dividend, it's not a good look. It's not, your stock gets utterly destroyed. So yeah, buybacks are nice in that regard. And it's kind of an instantaneous one-time thing. You do it as you want.
Let's see. Oh, Farzad chiming in. I love how Alexandra is using her time to educate us on these matters. 99% of the population doesn't have any exposure to this, and it's extremely fundamental to the economy. Absolutely, Farzad. And this is actually one of the reasons why I wanted to have Alexandra on here was, just the education. A lot of this stuff that people don't just know. I mean, and it's educating me too. I do not have the in-depth knowledge on this. So this has been huge for me. So
you definitely don't learn this on CNBC. That's for sure.
No, that's true. And there's so many little things like, people just take, it's just that blind trust that some people have in mainstream media. And that's dangerous. I mean, even some people on social media, that's why you always got to say, do your own due diligence, research, look what's out there. I even go out there and I
But
do pay attention to some Tesla Q and some bears and say, hey, maybe they are making a good point that I'm blind to right now. So let me take a look at them and see if they've got some, valid facts.
And you're right. We have to stay vigilant. And I mean, that's one of the reasons why I hate credit rating agencies so much, because it encourages this sheep behavior, right? They say AAA and everybody walks in the same direction. This is crazy. I mean, we should really get rid of that.
Yeah.
We should oblige people to think.
Dan.
Dan, yeah. Dan, stay in Canada.
Oh man, let's see what other questions we got in here.
I know them all. I know them all.
That's another thing that, I've been trying to do a good job of, like, what am I missing? Are there bear arguments here? And, everything I find, I'm yet to come across like a legitimate argument that like raises concerns for me, like it all comes down to, a lot of it is like what you get with Elon, and like people think he's a loose cannon. Okay. But like, where's the competition that they've been talking about for years? No one's getting to mass scale. There's still a couple of years of, Tesla's basically got as much of the market as they want. I mean, we've got this year, still in 2022, 94% of cars sold in the US are still going to be ICE gas cars, So the EV market is basically still entirely untapped. So even if everyone else is doing it, and that's another thing that I've thought about too, is like, let's say, all right, Tesla doesn't get to that 20 million a year mark. Well, if they can just get, let's say, 10% of the EV market, or the car market is what it's going to be in 10 years, 10 million vehicles a year, you project out with those profit margins we talked about, selling 10 million cars, that's 150 billion in automotive gross margin. There's all the money they need to fund the AI, to fund FSD, whatever projects they want to do, and be way ahead of everyone else still.
I mean, one argument from Tesla Q that I actually understand, because I would have loved it to happen myself, very selfish, is the 30,000 or maybe 25,000 or maybe now 35,000 Tesla car. I just, I would love to have a smaller, compact city car. Doesn't have to have the same huge range, but want the Tesla software in it. Don't want to go for a Bolt or a i3 again. I've had those, and I mean, I understand that the Cybertruck is the next product before we may even see this one. And I do understand, with the battery constraints, it was good to stay with it. Logically, I can accept it, but it is true that, that small Tesla car would have been nice to have.
You know what I wonder though? I mean, I think that this has been put on the back burner, for multiple reasons. The biggest being the focus on FSD, and that if FSD is solved, not everyone's going to need a car. But also, do you think that the Model 3 could become that car? Because the way I see it is, when it first came out, everything's gone up with inflation now, obviously, but the Model 3 was around 33,000, let's say. And if they can continue to obviously innovate, get the cost to make it down to the point where now they can sell that Model 3 for 30,000 and still make, 10,000 in profit off it, do they even need to make a new model, smaller model?
Okay, let me moderate that hope a little bit. We have a 3 and we had a Y, which we now have an X. I love the 3, no doubt. I think this is the most beautiful car out there. No, I mean, even compared to my X, it's just perfect in lines and everything. But I think it's not a practical car for a family. I think it's not a practical car for a woman who does a lot of shopping, a woman or man who does a lot of shopping. I would like to see something a little bit higher up, a little bit more compact to park and everything. It just, there is a size and a space around it that I find the 3 is too Porsche-like, too slick, too low, too sporty to really play that. I mean, I hear everybody telling me, yeah, the 3 could be that car. I hope not. I hope they do something a little bit higher up, a short Y version. You see what I'm trying to say?
Yeah.
That is just more utilitarian.
Yeah,
that still,
makes,
but
that
not,
makes
but
a lot
not
of
as
sense.
sword.
Someone in my comments had mentioned how maybe they make a Model 3 and a hatchback version.
Maybe that, yeah.
Yeah, but not so low, higher, right?
Yeah.
I mean, it probably
so like
is
a
because
model
I'm an old lady.
somewhere
but
between the 3.
Yeah,
like
so
a happy
like
medium
a,
between the 3 and Y.
Yeah, like a Y hatchback, maybe.
and shorter, right? A little bit more compact.
Yeah, because when you go over to Europe, and actually, this is a question here. Are you German?
I am. Of course, I am.
That's
I was
awesome.
born in Germany. I lived a third of my life in Germany up to 24. Then I lived a third in France, and now I live the rest that's left in America.
Nice. And you know full well from being over there that the roads, are much narrower.
Oh,
So,
sure.
having a vehicle like that, so even, putting a hatchback on a Model 3, you've got to shrink it down. You've got to have a smaller vehicle. So it's not so much the price as much as the actual size of the vehicle that is going to be better over in Europe.
Yeah, and I feel like it'll be the perfect entry, like if we get to the point where the demand has slowed down because that is one of the legitimate arguments that I hear is that Tesla at this point is priced like a luxury automaker. You're paying a
Yeah.
big premium, and eventually you're going to run out of consumers who are looking for, like you said, the $30,000 price range, and then that's where they could kind of maybe bust this out of their back pocket. And then it would make more sense to kind of go with the
And they
smaller
don't
car.
and that exactly, and that consumer doesn't need 300 miles, right? That consumer can
Right.
live with a 200 miles smaller battery, because that's short distances, lots of little errands per day. And I mean, then I hear the real fans, right? Farzad, I can hear you, get out of my ear, going, we won't need that anymore because we'll have the robotaxi, right? We don't need that anymore. Yeah, maybe that's the reason where they just said, okay, let's delay that and let's see how far we can get to the robotaxi.
They're
and then we'll
going
see what
for
they really
not
do.
part of the market. They're going for the whole thing. And then that's something, that they could, can come later, depending on FSD or either way, there's definitely places, like you said, that having a more compact car is definitely useful as well.
So now something I had thought about earlier today on my walk when I was outside making my earlier video was, what if in the future, something that is on Elon's mind is when it comes to FSD, it's going to be similar to cell phones right now. You're going to go out there and you're going to buy a plan for FSD and get the hardware, the vehicle, as part of that plan, because everything is going to have FSD. Obviously the costs are significantly higher, but maybe you go out there and say, hey, I'm going to pay $500, $1,000 a month for this FSD package. And I'm going to, then, maybe pay an extra $200 a month for the vehicle to go along with it. So I wonder if that's something that's going to play on down the road as well.
So you lease the car, or they lend you the car for a short period?
It's almost like a lease, but just like you do with your smartphones. You've got your smartphone and say, hey, you're not locked into an agreement, but you're paying for your car similar to a lease over the time, but you're really paying for FSD. You just get the car along with it to use it. And then, hey, after a certain amount of time, if you want to upgrade or trade in, you can go ahead and do that with your vehicle. I'm just wondering if that's something that may be on the radar down the road with FSD and everybody using robotaxis, because,
interesting.
and
I have
ride
to think that
sharing.
through, but yeah, I mean, I do believe shorter leasings, or even more occasional leasings, I think is a good thing. You have students are there from September to May. They may not need a car 12 months around. If they can have an 8-month deal where they can, they have the car, they have FSD, they may even Uber because they have enough time to do a job with it. And then after the 8 months, when they go back home or do something else, they can just give it back. Because what I think today is the whole car market is still quite stiff, right? I mean, I know there are now the swapper leases and all, whatever, but if you want to, it is still the second largest commodity in somebody's life. They buy a house, they buy a car, right? The car is your second biggest investment. And it's still quite stiff as the way it's structured financially. Either you own it, or you finance it, or you lease it. But you can't really get out of it quickly, except if you resell it, right? But you may not want to be in this complete on and off situation. You want to be something more fluid, where you have it when you really need it, but don't need to pay for it when you don't need it.
I wonder if colleges and universities would get into ride sharing then. Maybe they buy a fleet of 100 vehicles and then just have the students go out and take them as needed.
I think that, stuff like that, again, kind of comes down to the robo-taxi thing, but also is something that could be very useful when we do hit a demand wall to, open it up to, it's a cheaper to lease the car, obviously, than pay $50,000 for a new car. So yeah, I could definitely see them coming up with stuff like that down the line.
Let's see, grab a couple more questions and then we'll get off of here. Danny asks, what does the BMW purchase of 4680 battery mean for Tesla? I actually didn't even hear about this. Do you guys know about this?
I was reading about it before we hopped on. So BMW's essentially said that they're making their own version of the 4680. That's going to be, sounds like basically the same thing, and mass produced by, hoping for 2025. It's always 2025 with these companies. It's amazing. But here's what I think about that. I think that this is very bullish for Tesla, because best case scenario now for BMW is the following, that they get the 4680 ramped up, and that, you know, obviously is going to take a miracle. But like, let's just say, I'll give them the benefit of the doubt. They get there 2025. But this means that by 2025, their best hope is to copy where Tesla is at today. Their best hope is to be on par with Tesla, right? And by that point, I feel like this is where you look at Apple with the iPhone. Other smartphones came out that are even better, but Apple had that loyalty. They built the brand, you know, and this is what I feel like is going to happen. Why would I buy a BMW that probably is going to be more expensive, that's the same price as a Tesla? And I just feel like the more time that passes, seeing things like this only helps Tesla. Like, okay, now Tesla has set the industry standard. Everyone else is just copying. That's only going to get them so far. You know, this is also like, we've talked about the book by Peter Lynch, 0 to 1, right? Tesla set the standard. They went 0 to 1. Everyone else just copying and doing more of the same thing. It only gets you so far. And this is the issue I have.
And they only copy partially. Right now they copy the battery. They don't copy FSD yet. The whole software. I think those German car makers, I watched this morning an interview with Jan and Alex Voigt, which I love a lot. I mean, he's really very, very precise on German car makers. Those German car makers still haven't understood that software is the key element. They have nobody in their management team that's a software expert, right? They hire they hire software engineers, but then, you know, it's not because you hire 5,000 people that it happens. And so good for them that they're finally jumping on the right battery train. Funny.
But isn't that what got Herbert Diess in trouble too?
Exactly.
Because he called them out on that, yeah.
Mm-hmm. Yeah.
Here's someone
I mean, without the software, what the heck to have the right battery? Good, better than nothing, but that's
that kind of just gives you some insight on how they're operating. Here's Herbert Diess raising legitimate concerns, who has said we need to learn from Tesla and saying our software is not up to task. What is their strategy? To get rid of that guy because he ruffled feathers. Exactly. You know, it just kind of goes to show you the industry standard. They don't set the bar very high.
I wonder software is the big issue and the big differentiator. Yeah, sorry about that, Tim.
That's right. And I wonder where Diess is going to be going next. Where do you guys think? Because I know the last time they did this, they kept him on for, you know, whoever it was, I think it was CEO, they kept him on until he was done and then he was gone. But it sounds like Herbert's actually gone.
He still has a contract for 3 years.
He does,
still paid 2.2 million euros per year plus bonus, because he has actually a guaranteed bonus on top of that for 2025. Now, that's something usually you can negotiate. If you find a new employer and whatever, you can go back to them and say, look, I mean, I know I make you pay until 2025 all this money, but if you release me now, we can stop this whole thing now. So I'm not sure he'll do that, but if he gets an offer that's interesting for him, that may be an option.
Yeah, I would love to see him go to Tesla. He's already got, you know, a great relationship with Elon. Maybe one day.
Yeah, I'm sure there's a non-compete there though, so I don't know. And he's, you know, I think he's 65 now, or he's in his 60s. So I don't know if he's going to
age shaming here. No age shaming here.
No, not at all. Just wondering if, you know, maybe at his point he's just going to decide to retire versus continue working on. I don't know if he wants to take on technology and working for a company like Tesla.
To join their board or something part time.
You know, maybe he just goes on the board. Maybe he just gets on the board with Tesla. That'd be nice.
Yeah, that'd be already something.
Two more questions here. Let's see.
Let's do it.
Blake, how much do you factor in Tesla Bot into your evaluation? When do you predict it will come online?
So in my evaluation, not at all. Not at all. I'm still completely on cars. I don't even have a huge FSD other than the take rate, which I have below 10%. So I'm the most conservative you can imagine, and my numbers are still phenomenal. So I'm not worried. All that is extra bonus for me, but I'm actually much more positive on the bot. I've talked about that with Warren a couple of times, who doesn't agree with me, but that doesn't matter. Which is that I do believe the bot comes quicker because it doesn't need any government or agency to approve it. It will be used in the factories. I do believe the consumer bot, where really it comes home and does my laundry, that's probably going to take a couple of years. But the industrial use of it will come very quickly.
Yeah, I would agree with you. You know, that's kind of my take on it. Is I just focus on the cars, you know, focus on what we have already. And I know this is something I really liked when you were on Farzad's channel. Gary had mentioned, you know, kind of just counting not counting anything that's not already there. So to me, the bot FSD, it's all a bonus. But like we said earlier, just seeing that Tesla could sell 10 million cars, make 150 billion gross profit, that's all I need to see, because now that money can funnel into, I almost can see for Tesla becoming almost how you look at Google, Amazon's businesses, they can just get 10% of 10 of these different markets, right? And that's all they really need to be, a top dog there. So that's kind of how I look at those things, and kind of not counting the eggs until they've hatched. And the fact that Gary kind of, has that same very methodical approach, and he still has a 1,600 price target, so I kind of like going with the conservative estimate on that as well.
Yeah. Yeah, and that's by far enough. I mean, can you sleep with that? Sure, you can sleep with that. You don't need to. And on top of it, so much else can go wrong. If you suddenly shoot up your expectations, you'll just be disappointed.
Right.
There's no need for it. It's already looking so bright. Doesn't matter.
Yeah, I'm in the same camp as you guys. Very, very conservative, like Gary. Gary Black is, same thing. He's like, I'll add those numbers in when we have concrete numbers to add in. Otherwise, it's just a guessing game, and you can't run real numbers with a guessing game. So
maybe after AI,
and the
next AI day, maybe we'll see what we get.
Exactly, and so that's why I thought. So the good thing is we can buy today's stock around 300, right? We all know it's worth more. We all know, so that's a very good feeling. Would it be at 600 because everybody's starting to project too much? Well, wouldn't be such a good buying occasion.
Yeah, and that's kind of what got it into trouble. Obviously, a lot of macro stuff too, but we got that Hertz deal. Tesla's adding hundreds of billions of dollars of valuation. It, it kind of got a little ahead of itself, and it has not gone back to those, pre-split peaks.
Yeah, because when you start pricing in the entire future of the next decade, then the stock price isn't going to move anywhere. So it's,
exactly.
let's take it step by step. And once, hey, I'll be pleasantly surprised once we get FSD as solved and we can see true concrete numbers from robo-taxis, then great, my valuation is going to go up.
Exactly.
All right, last question. This will be a fun one. So buybacks. I was going to ask, when is the next stock split? When do you guys think we will see the next stock split?
I mean, no matter when, I really hope it's not 3-1 again. I found that was really a nothing burger. I'd rather have them wait until we're in the thousands again and then do something more substantial, like at least 5-1, than doing in the early 700s or then it was 900.
Yeah,
a 3-1.
I agree. I think that it all came down to, everything kind of went to hell in a handbasket. The stock was lower. Had it been at $1,000 still, probably would have got the 5-1 split, and that would keep them in line with, Amazon and Google kind of set this trend now. Their splits 20-1 took them to, around $200 a share post split. Yeah, I would second that.
So do you think that they ended up going with a 3-1 this time around strictly because of the macro was a lot more uncertain? They weren't sure what things were going to be heading. Do you think that if they went with a 5-1 and bring the stock price down under $100 could have been, detrimental and really, targeted by shorts?
It could have been. I
Difficult for me
mean,
to
yeah.
speculate, yeah. But one thing is, it really messed up my math, right? Now I have a 5-1, I have a 3-1, now it's 15-1 together. I mean, you're laughing, but I mean, I have to adjust all this stuff every day in my table. I'm like, oh, what's this now?
Oh, I know. Yeah, we showed this before. $1,000 is a $1 trillion market cap. It was super easy.
That's what I like too. It was so easy to keep track.
We're in the middle of this whole thing.
I wouldn't complain if we got like a 10-1 next time. I think it's all going to come down to what the stock price is at, like you said. And
yeah, and that's what I'm saying. The problem is now we have 15, right? 5 and 3, so that's 15. So we have no chance of ever getting a good multiplier to get us just to 100, right? This is
love those round numbers. They ruined it.
Exactly. They would have done 5 and 4 and then 5 again, right? We would have been at 100, but with this stupid 3. There we are.
But see, Elon's brain can do it. He's great math. Elon doesn't have a problem.
Sure.
Awesome. Well, we're gonna tap it out here. Alexandra, thank you so much for giving us this time this afternoon.
A pleasure.
This has been awesome, and thank you, Vinny, for joining us as well. Alexandra, where can everybody find you?
Oh, well, Tesla Boomer Mama, I need your support because we're going to do another thing. The next steps are we're trying, and this will be published in a couple of hours, maybe tomorrow, a letter to Yahoo Finance where we ask them to have the Altman Z-score visible on their Yahoo Finance pages so that people don't go back to rating agencies. And after that, we want to send to your pension funds and investment funds and whatever else helps you choose your investments, whether they still use credit ratings, and if they do, please make them change. So we're setting up templates, whatever. So whenever this comes out, will be a couple of days. Sorry for my cough. But I want you to spread that, because this should go beyond the Tesla family. It should really go out to all investors, because I think these credit rating agencies just have too much power, and we need to pull their teeth once and forever. And so more support we have, better we're off.
Awesome. Excellent. We will definitely support you on all of that and all of these endeavors.
Thank you.
And thank you so much. And thank you, Vinny, for being here. You guys know to find him on Investment Club over at his channel. He's also Vinsanity over on Twitter. So otherwise, thank you guys so much, and we will see you all next time.
Thanks, guys. A lot of fun and super
Thanks a lot, Tim.
informative.
Yes, thanks.